Hello everyone, this is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, November 24th, 2025. Well, last week the logjam lifted a little bit, or it was broken. We have some economic information to share with you. Unfortunately, most of it is kind of dated, so the utility, not terribly high, but we'll go through a few of them. So starting last Tuesday, we strangely enough got one initial jobless claims number from middle of October. That was a little worse than expected, 232,000 versus 223,000 consensus. But then on Thursday, we had another 6 or 7 weeks that were announced, and it's not worth going through all of them. Simple explanation or discussion on that is in average over 8 weeks that were released last week, the average weekly unemployment new claims was 226,000, pretty much where we were at when we started this whole thing with the government shutdown. So not much information there. Now, one thing we did get on Thursday was non-farm payrolls. However, for September, it was better than expected, quite a bit better than expected. So 50,000 was the expectation. It came in at 119,000 new jobs. Again, old information, but that was good to hear. Unemployment rate ticked up slightly, participation rate up. That number bounces around, and as those of you who have watched us over time, we very often don't spend a lot of time on the unemployment rate because it is a bit spurious. So non-farm payroll number, much more important. Also last week, average hourly earnings was released again for September. It was expected to be up 0.3, came in at 0.2, so I don't think a big deal. Lastly, on Friday, we did get the Michigan Consumer Sentiment number. We've talked about this every time it comes out. It's a horrible looking chart. It was at 75 less than a year ago. Now down to 50.5 is where it came in for the month of November. And the expectations were just a little bit higher at 50.5. Some good news last week, or confirming the fact that third quarter GDP was likely pretty strong. Atlanta Federal Reserve, again, going to guess when the GDP number is released. This number will probably be too high. It just seems like way too strong. Nonetheless, Atlanta Federal Reserve believes third quarter GDP growth was 4.2%. After a very strong second quarter, maybe I would take the under on that. Inflation expectations, that keeps coming down. It's really quiet. No one's talking about it much. But the 10-year break-even has now dropped. It was hovering up close to 240. It's been coming down seemingly almost every week and is now at 2.24%. Fed funds now, this number has really jumped around in the last 3 weeks. Investors getting excited about the likelihood of a December rate cut, then worried it's not going to happen. And then last week, Friday, a Fed representative suggested maybe we will have another one in December. So the odds of the Federal Reserve taking another 25 basis point cut in December 10th, rose from 42% the week before up to 76%. So the market loved that. That was at the end of the week. And in fact, out of all this economic data, probably the most important thing that hit last week, at least for equity investors here in the U.S., and those tech inclined, was Nvidia posted their earnings on Wednesday night. And it's kind of a broken story, or a repetitive story, I should say. It was much better than expected. The outlook was really good, even without any expectation of any revenue from China, which has been a big contentious issue. So the markets love that. On Friday, or I should say on Thursday after it was announced, the markets rallied hard, came back throughout the day. But then on Friday, after the Nvidia numbers the day before, plus the Fed suggestion that maybe we are getting a cut, led to a pretty big rally on Friday. And Monday, as we're taping this early Monday afternoon, markets are also up very strongly today. So how did markets react to all this information last week? Was not a good week. Now, we mentioned things started off really tough. Monday, Tuesday, Wednesday, really tough. Thursday, kind of a push by the end of the day, but Friday up strongly. Overall, S&P 500 down nearly 2% on the week. It was down 1.91%. The thing that stands out is NASDAQ was down 2.7% last week. And also, despite the fact, and this is not common, NASDAQ down, again, at 2.7%. It's mostly large cap. Small cap actually held up better than most would have expected, and definitely well in a down week. It was only down 75 basis points. And the other thing in the week is we look at growth versus value. Again, this is something I haven't seen hitting the press or anyone really talking about, but value has quietly overtaken growth on a year-to-date basis. Last week, growth was down over 3%, almost 3.1%, value down less than 1%. So on a year-to-date basis through last Friday, growth in the U.S. up 9.8%, value up 12.8%. International last week got hit much harder than the S&P 500. We've mentioned many times this year that international markets have outperformed the U.S., which has not happened much in the 7 years that I've been with Zhang, but that has been the case. But the international gave up some ground last week, again with the S&P 100 down, 500 down last week, almost 2%. You had developed markets ex-U.S. down more than that. They were down 2.13%, but you had emerging markets down 3.7%. With all the concern over interest rates and AI, all the concern last week that hit equity markets, there was a move towards fixed income. So fixed income rallied again. 2-year was down 9 basis points. The 10-year was down 8 basis points. So the Bloomberg U.S. Aggregate Bond Index up 45 basis points, and now on a year-to-date basis up a very strong 7.05%. Let's take a look at the economic data this week. Again, we're still playing catch-up, so I think almost all of these numbers are September numbers. It'll be nice to see them, but it just doesn't tell us a lot about what's really going on. But we will get PPI, core PPI, released tomorrow on Tuesday. The expectation for PPI month over month is positive 0.3 for September. Also for core PPI, exactly the same, a positive 0.3. Expectation of retail sales coming out on Tuesday for September, expected to be up 0.4. For the month of August, they were up 0.6. Likewise, retail sales ex-auto expected to be up 0.4%, a slower pace than we saw in August, which was a positive 0.7%. Wednesday, we get a lot of data points here. Most notable PCE, that's the inflation gauge the Fed puts most credence in. So we're going to get the September PCE index number month over month. And the expectation is 0.3% increase month over month. In August, it was exactly that, 0.3%. Core PCE is expected to rise only 0.2% in September, which is the same thing we had seen in August. We'll also get personal income, personal spending, new home sales, durable goods. They're all September numbers, so we're not going to spend any more time on it. Lastly, though, we will get the unemployment claim number, the initial jobless claim. This will be an up-to-date number, so this one will be important. The expectation is 227,000 new claims. For the prior week, it was 220,000. So that's it for our weekly economic recap. We thank you so much for joining, and we'll look forward to seeing you next week. Thank you.